Hello and welcome to another episode of Livewire's Buy, Hold, Sell. I'm Grady Wulff. Now, valuations have been the talk of town over the last year, the FY25, with some valuations soaring and some names are definitely underperforming. But can this continue into FY26? To discuss this, I'm joined by James Gerrish of Market Matters and Henry Jennings of Marcus Today. What better way to start, gentlemen, than talking with the top 5 performers and top 5 underperformers of the last financial year? James, I will start with you. Evolution Mining, it's up 143.4% over the last 12 months. Are you buying, holding or selling heading into FY26?
We own it, we're holding it for now, but would buy it at lower levels. My only reservation being is that gold's a really super over-owned trade. Concerns around the potential for the US dollar to rally from here. The short US dollar thesis is really overcrowded as well. So if the US dollar rallies, I think gold could come off and we'll get a better opportunity to top up our Evolution holdings. So somewhere in the $7 to $8 would be buys.
Henry, Evolution Mining, buy, hold, sell.
Pretty similar, really. We do hold it. I would continue to hold it. I like Jake Klein. He's done a fantastic job at Evolution. It's got the copper exposure, which I like. 34% of revenue is copper, which is good. I agree with James about the gold side of things. It has run really hard. UBS downgraded it a couple of days ago, as well as Northern Star, and that really took the wind out of its sails. So I'd just be careful. Let it settle. I'd be a buyer on the back foot, accumulate. I still like gold. I think gold is going to be $4,000 this year for whatever reasons, and there's plenty out there. But I think, every now and then you shake the trees and people drop off. And I think at the moment we're having a bit of tree shaking, but it's definitely a hold.
Temple & Webster, a company I'm very familiar with at the moment, buying lots of furniture for my house with Temple & Webster. So are you a fan, buy, hold or sell?
I've never used the Temple & Webster service. Maybe I should.
It's fantastic.
Is it?
As a customer, yes.
I have to say, I was always kind of skeptical about buying sofas and furniture online because you like to kind of sit on them.
You're the old Harvey Norman man.
The old Harvey. I never bought
or Nick Scali.
No, I've never done either of those two either. But it's king for me.
Of course it is.
I like Temple & Webster. I've got to say their website has expanded dramatically. They seem to be very good at social media. Yeah. It's a tech stock with a tech platform, and clearly, witness for the prosecution.
Preaching to the choir.
Preaching to the choir here. There's clearly a need for people, time poor, who want to buy stuff online, and I think it's done a great job. So I'd be continuing to buy this one, I think.
James, are you a fan? Buy, hold or sell? Up 140%.
Yes, phenomenal run. I'm going to go a sell on TPW. I have used it multiple times and I think it is great. I think one of the things that have driven the share price higher in the last 6 months or so has been an expansion in margin. Which has been an area they've been really grappling to improve. And I think that the update that they provided showed some one-off impacts to that margin expansion. So if you look at their guidance for the second half, it implies that margins have contracted again in the second half or will contract in the second half. So I think when the share price is up by that much, I think it's too expensive for what they're delivering. And they've had a great run. They've also they call out themselves being real strong beneficiaries of tariffs. So we're getting easing tariff situation. So that should be one of those tailwinds that come off the boil a little bit for TPW. So it's all been great until now. I don't have any grave reservations for the stock, but it's too hot for me.
James, GDG, Generation Development Group, up 124% over the last 12 months.
Phenomenal.
Are we buying, holding, selling?
Phenomenal. I'm a hold. I think they structured a business that's great in a few different areas. So tax-effective bonds, they've got an independent research through the purchase of Lonsec, and then they've got a managed platform or managed account business, which is going phenomenally well. So they've put all these three things together, and I operate in a similar business to these or sector to these guys. So I can see their rationale for doing these things. It's attracting really strong FUM on 21, 22 times earnings. For me, it's on the rich side. Every fundy out there in the mid-cap space has been promoting this one. So I think all of the hot money has gone into it. I think it'll take a while for it to grow into its valuation.
So buy, hold or sell?
it's a hold.
Hold at
Thought
the
I
moment.
said that, but
Sorry,
obviously
maybe
missed
you
it.
did. Henry, are you sentiment the same, or are you differing to James here with the Generation Development Group?
I guess I'm not differing that much. They did have a big wobble after the latest results, which was a fantastic opportunity. And I must admit, I jumped on board at $4.15 and thought I was being really smart, getting out at $5.05, and they've just kept going ever since. Grant Hackett is the man behind this. And he has done a terrific job. And as James says, it's a great platform. The Lonsec thing really has helped them. I think it's just got to, because I sold it at 5.05, maybe I'm feeling a little bit of seller's remorse, and I probably look to trim this one. I know we don't do buy, hold, trims, whatever, but I think I'd be taking some profits. It's run really hard. The market was well and truly spooked with the results. It got below $4.15. I looked a bit silly for a while, and then it just kept going up and up and up and up. But I think I'd be trimming, just taking some profits in this one. So probably a sell up here.
Now, in the tech space, Technology One, it's a name a lot of investors know and love, and at the moment up 120%. Buy, hold, or sell?
Rudy's a happy bunny, isn't he? I couldn't go against Rudy. It's for me, it's a hold at the moment. It's done a great job, executed really well. The cream rises, and this one is been shown to be one of the cream stocks in our market. So I think hold, but only because it's run so hard.
James, Technology One, thoughts, buy, hold, sell?
I've got to sell. I think Henry's point, they've executed really well, but they're now just simply too expensive for the type of business they are. So they do have levels of levers to pull in terms of growth. They're obviously dominant here in Australia. They're growing a lot over in the UK. So, they've got ARR growth above 50% over in the UK. They're winning federal government work, which is another positive thing for them. $42. I just can't. I can't get my head around valuation. But in saying that, I've been wrong. So I've been thinking this for a while. So I'll put my hand up and say, these things that execute particularly well have been bid up above where I think they're worth. So not one for me, Grady.
And to round out our top 5 top performers, Life 360 or 360 ticker code. It's run pretty hot, 95.9%. James, buy, hold, or sell?
Yeah, phenomenal stock. I've got it as a hold now, but I do like it. So this is a fundy favourite. Everyone talks about 360. I think there's a couple of catalysts that they need to get right in the back end of the year. They're obviously expanding their market into pets.
Yeah.
Fourth quarter of this year.
And
so
home insurance.
Track your pets, and then
roadside assistance, all this stuff.
Well, you think about a platform business. I mean, you get users on your platform, and then you monetize those users. So people like their platform, people continue to use their platform, and people are paying more for it.
Yeah.
So then you plug in all sorts of different things throughout your life. If they do that intelligently and continue to present good user experience, they'll be able to leverage into a heap of different areas. So leveraging a user base is the key to a platform business, and they're doing a pretty good job of it. So hold for me. We'll see how the pets roll out in Q4, and we get a bit more understanding around the actual metrics around that.
And how many pets get lost? Henry, buy, hold, or sell for Life 360?
I've always thought this one is slightly creepy, being able to track things, and that's fine. Tracking your children, perhaps when they're 8, 9, 10, or whatever, but maybe as they get older.
Not 30.
Confession. But there is a lot of competition as well. You walk into JB Hi-Fi, there's a lot of competition in that pet space. There's a lot of competition from Apple, Find My Friends, Find My Phone, AirTags, etc. So there is a lot of competition. James is right in the terms of they've got all these users and they can monetize it. That's really useful, and that can be huge. But we've seen that argument from the banks over the years. We've got all these customers, we're just going to sell them this. And people are going, you know what? We don't want all that crap. We just want the banking service. We don't want the other stuff. So I think there's a danger there. It is huge in the States. It is an American tech stock. Tech is still very much in demand. AI is going to help it. It's a hold, but I do find it creepy, and I do worry about competition, especially, if Apple decides to do something similar. It's not a million miles away, is it? AirTags, pets, tracking your kids.
But we're running off iPhones as well, so Apple just embed it straight into the phone. So
Exactly.
right on that point.
Exactly.
Then it'd be really creepy.
Then it'd be even
It's
creepier
creepy
because then
and
we all have it.
It's creepy enough.
Okay, let's go to the bottom end of the stock market, the place we like to avoid but have to talk about. IDP Education, Henry, down 76.5%. Is there upside potential?
I really don't see a lot of hope at the moment, to be honest. I think the political environment is way and truly against it. The moves from government to limit house price rises through immigration controls and student controls is overwhelming. You know, what Trump is doing is spreading. You know, Canada, the UK, Australia, and we were already, you know, crimping university students. I really don't see a catalyst for change in this one. I think it's an avoid. Way too early. It's plummeted. You know, it has plummeted. I think the Australian universities that sold out, did they sell out? But I think they did. They did very well. They saw the writing on the wall. The deans earned their money that year. But yeah, no, I think this is an avoid for the time being.
So avoid for that one. James, unfortunately, IDP really sold off recently. Do you see light at the end of the tunnel?
Well, it's had a number of downgrades. So the last one saw it down to, what's it trading at, $4, where they downgraded volumes by 30%, the stock price moved by 50%.
Yeah.
It's gone from, I think, from memory, $18 down to $4. I mean, that is a huge move in a stock that was incredibly well loved for a lot of
It had a time
investors.
and place for sure.
It did. So you think, you sit back and think about, I totally agree, in the next 6 to 12 months it's going to be, I don't see there being a turnaround there. But if the model's not broken, completely broken, then this will represent value at some point. I think we're probably too early now. They've downgraded, the stock will bob along the bottom for a while until investors get confidence or the trends start to improve. But I'd put this on your watch list and be one to see when the trends start improving. This has a big runway to improve in terms of share price.
In it, hold it?
I'd be a hold if I'm in it. And looking to buy it in 6 to whatever month when we start to see improving trends.
So premature right now?
A little bit premature right now, but we've had multiple downgrades. It's on its knees. It doesn't have balance sheet stress, so it'll get through.
Yeah.
So it's actually I find it interesting down here.
Now, Mineral Resources, one that's broken a lot of hearts, including my own.
Yeah, mine too.
Let's talk about Min Resources. The buy, hold or sell, down 52.32% over the last 12 months.
Well, I've backed it for the year. We're not down by that amount, but we're still down on our position. I've got it as a buy. I think the trends around debt will be addressed. The market will get confidence again in MinRes. You look at their bonds have started to blow out a little bit, but it's only at the margin. There's not a huge amount of concern from a lender perspective, a credit perspective. So maybe I'm, the iron ore and getting Onslow back on track. They held an analyst day out on the Hall Road 2 weeks ago, which hopefully instilled some confidence in their ability to, because they have built a huge operation there. Like, you can't take that away from them. Yes, they're a bit squeezed in terms of debt at the moment. Yes, Chris Ellison has done some things that he probably regrets doing, but the asset there is a big one, and you will realise value out of this asset. Sometimes you just got to be patient and see through this short-term noise, and Henry's going to rebut this and go the other way.
Henry, are you going to rebut this?
well, not completely. You can see the attractions because it has been such a dog and it has been wrapped up with the whole Chris Ellison thing. But, the two key commodities, iron ore and lithium, not great commodities to be in. The Hall Road has had problems with trucks just dropping off them, which is not great. And they have got $5 billion worth of debt, which is not a good place to be in. So I think, it's probably not a bad trading stock. There's a big short position. So when it runs, it runs. But when the shorts gather themselves back up again and, nail their courage to the sticking place, it's back on with the shorts again. So it's probably a great trading stock. In that respect, it's probably a hold, and it's a buy at $15. It's probably a sell at $28. And, where it is now.
Gee, we're near the sell then, Henry.
Yeah, well, you look at the iron ore price, 92.30 or whatever it was today in Singapore, and you look at where lithium, and there's no sign of any bounce in the lithium.
No, but I don't think there's a lot of value ascribed to the lithium components of
there's
their
not
business.
a lot of subscribed to the iron ore either now.
There's not a lot of value in general.
And you know, strategically, it would be hard for them to be taken out by a bigger player, especially a foreign player. We've got Santos at the moment as well. It would be strategically hard for a foreign player to take them out. You've got the Chris Ellison factor there still. I think this is, you know, it's a trading stock. It's a hold, but it's, lithium and iron ore, struggle street.
Absolutely. Now, sticking in the resources space, Paladin Energy down 48.48% in 12 months. Buy, hold or sell, uranium is back. Are we bullish?
Well, uranium stocks are back.
Yeah.
We haven't seen a real jump in uranium spot price, but I've always had this theory that the spot price is manipulated anyway, and and it's all a big conspiracy. And I did discuss it with Guy Keller at Tribeca, and you know, he said it's the hardest. He's traded commodities for 20, 30 years. He said it's the hardest commodity to pick and analyze because it's such a thin spot market and everything is on long-term contracts, which they get freaked out when the spot market goes bad. Paladin, they had problems, a bit of rain issues in Namibia, rained too much. I think this one is back on track. I think the commodity itself is clearly starting to get that momentum. $200 million worth of spot price buying is going to help. And it's heavily shorted. And you know, when you play the uranium game, the go-to is Paladin. I think it's a buy. I'm with James on this one.
James?
Yeah, I've got it.
Henry giving it away?
I've got it as a buy, Grady. I think there's a couple of things that are changing the narrative around uranium. We've had obviously a lot of the tech companies over in the US talk about contracting nuclear energy under long-term deals. So that's a big tick over there. We've got President Trump, who has become a lot more, or is positive on nuclear power, so that's a tick there. And now we've got, you know, the spot market has been just in a hiatus for a little while. It was trading above $100 a pound. It's now about $75 a pound. But the majority is done contract pricing. Contract pricing is being done at higher levels than spot, but spot drives sentiment in uranium and sentiment in uranium stock. So I think that to me is, you know, it's high risk, it's volatile, you know, all those things. But if you close your eyes, I think Paladin will be significantly higher in the next 12 to 24 months than it is today.
Now, still in resources, a gold producer, Bellevue Gold, has been battered down pretty bad lately. BGL, 48.46% down. Are we buying, holding or selling?
Gee, I'm going to throw it on a sell. It's not one I'm across significantly, but you think about they've had production issues, they've had management issues, they've hedged their gold price at the wrong time, throwing a capital raising at a 20% discount or whatever they did to boot as well. To me, there's buying gold for me is more of a macro play. As long as the companies are executing operationally, that's where I want to be in terms of gold. And Bellevue's just had so many operational missteps for me.
It's been a very tough run, Henry. Bellevue, upside potential?
It'd be hard to lose money, wouldn't it, being a gold miner?
You'd be infuriated.
Yeah.
You would be ripping your hair out.
What could have they done worse? I mean,
there's been a lot.
They have stuffed it up right royally. The good news is, I guess, is they've unwound their hedge book. The argument could be that they've managed to pick the top of the gold market to unwind it, but at least they've used other people's money to do so. And diluted the existing shareholders. For me, this is a buy, mainly because they've stuffed it up so badly, and there is so much M&A attraction in the sector that the resource is still in the ground. I mean, that's the beauty of a gold company. As long as the resource is still there and the grades are still there, even if you stuff up production and you miss production for 1 year, in some ways that can be kind of good, because if the gold price keeps going up, then the production that gets pushed into the next year is worth more money. So, clearly they sorted out the debt issue to some extent with the equity raise. They sorted out the hedging. Management's been crap, but the resource is still there, and somebody is going to buy this because it's just cheaper. It's cheaper to buy a resource that they know and they've got some certainty over, they'll bid $1.20, it'll go for $1.30, and everyone will go, oh, thank God for that.
Yeah.
You know, it'll put everyone out of their misery.
I've been down the mine and it looks pretty good. I've even seen them pour gold and it looks pretty good.
Well, that's the thing with gold company, with any resource company, as long as the resource is there and they haven't stuffed up all the models and the grading, etc., it's valuable to somebody.
Yeah.
And somebody will put the management out of their misery and get back on track. So that for me is a buy. So
let's jump elsewhere in the sectors. PolyNovo down 46.73%. That's a big sigh there, Henry. Talk to me. Buy, hold, or sell.
It's been tortuous, hasn't it? It's had so much promise. You know, it continues to have record months in terms of sales of Novasorb in the US, but clearly there are issues in the US in terms of healthcare and uncertainty. It's heavily shorted. It's gone from $2 to $1.20 or something at the moment. I wouldn't be chucking it out here. It's done the damage, but I'm not sure what the catalyst is for a re-rating at the moment. I mean, even if they put in another record month of sales, everyone's going to go, yeah, so what? Maybe we need to see some certainty in the US healthcare system. I think that applies to CSL, that applies to a lot of US exposed healthcare stocks. We just need that certainty. And it's still early days. We've got another 3.5, 4 years of...
Mr. Trump.
Well, not just Mr. Trump, Mr. Kennedy as well. I mean,
exactly.
That's the problem. So here it's a hold, big short. It's doing all the right things, but it just, needs some certainty.
Do you differ in view on PolyNovo, James?
I've got it on a sell only because you go through the red flags that companies deliver, and they've had management issues, they've missed guidance, they've been a pretty highly valued stock before all of these issues played out, so you get a big run for the exits. And to me, there's Biotech, it's difficult enough when with good management, when you've got guys in there that are running it that are struggling, that have had all sorts of issues presented to them. It becomes too hard. So there's no reason to be there. You're sort of you're there, you're holding and hoping, as opposed to having a really structured reason investment thesis to be there. So it's a sell for me, but I'm no expert in the space, so take it with a grain of salt.
James and Henry, thank you for joining us, and thank you for joining us for this episode of Buy, Hold, Sell with Livewire. If you enjoyed the episode as much as we did filming it, I hope you subscribe to our YouTube channel.